Good morning, everyone, and welcome back to the CCI platform. And for those of you who don't know me, who are just joining today, my name is Liam Gartland, and I am founder and producer of the GradFest. And for more information about the GradFest, you can visit www.thegradfest.co.uk. But first of all, this morning, on our wonderful cloudy morning, and our first day of lockdown, which, this is a platform that is quite helpful, especially during these times, because we're able to still continue our training and still learn and get advice from industry professionals. But we can do it from the comfort of our own home. So especially in a time like now, it's a great thing to have. Before I start, please make sure you subscribe to the YouTube channel to enable you to comment and ask any questions that you would like to throughout any of the stream. But without further ado, I introduce Natalie Corrigan, who is from Theataccounts. Hello.
Good morning, Liam. How are you?
I'm good, thank you. How are you?
Yeah, I'm not too bad, thank you. Here we are again.
Yes, of course. And many of our viewers, know who you are because you've done quite a few of these videos. So I will leave you to it. And if you have any questions, just give me a shout.
That's great. Thank you, Liam. Good morning, everybody. As Liam has said, we've done quite a few of these. So hopefully you've tuned in to some of our tax talks previously. But if you haven't, and this is the first time that you're joining us, welcome. So how I normally conduct these tax talks is we tend to pick a topic to talk about on each time, something that's relevant that we hope for each of you. We've gone through so many different things whilst we've done these tax talks. We've talked about being self-employed, what that means, what your requirements are. We've talked about tax returns, how to complete one. We talked about expenses. We've gone on to talk about limited companies, VAT. I think I did one perhaps a couple of months ago now for seafarers, so a tax relief that's available for individuals who work on board cruise ships, which is quite strict criteria. So we went through that in quite some detail on that tax talk. And then my last one that I did a month ago, it just goes so quick, and we're here again, was the bookkeeping talk. And what we've done here at Theataccounts is created a spreadsheet for our clients, but also for, you don't need to be a client to access this spreadsheet. So we talked about bookkeeping and how important that is for you as an individual, if you are a sole trader running your business, or even when you're a limited company, how important bookkeeping is. So that was a really great tax talk, and we had some fantastic feedback from it. We also said to anybody that requested the spreadsheet that if you message us, then we will also put you in for a prize draw to be able to win our competition to complete a tax to win our competition and get a tax return completed free. So I will also be announcing that later today. So first of all, I'll go through our slides. I'm just a bit worried that they're not actually showing up on here. So I don't know if Leah, let me see. Hopefully come up in a minute. Okay, there we go. Sorry, I was in a panic then because I thought I can't see that my slides are up, but I think they're there now. So let's just go back. Sorry, so as I was saying before I started panicking, when I did the bookkeeping talk on the last one, anybody that requested the spreadsheet from us entered into a prize draw to win a free tax return completed by us here at Theataccounts. So we've picked someone. We had an overwhelming response to that. We had lots and lots of people request it, which was fantastic. Thank you. I will put in the link in this tax talk if you missed that, how to request it. But I will be announcing the winner of that competition later on this talk today. So that's quite exciting. So what do we cover today? I've covered so many other things that we decided that the most obvious thing would be to cover what's changed in terms of support because of COVID. We're now facing another lockdown, aren't we? Which lots of people see coming, I suppose. So we're now in another lockdown. There's been lots of changes to the support that's available to individuals and businesses. So that's what I will be covering today and going through all of that support, what's changed since we last covered this at the very, very beginning. So I'll start working through these. For those of you who don't know who I am, so I began my accountancy career working with Alex, who's the owner here at Theataccounts, back in 2002. I then left to teach accountancy and tax at BPP University in Birmingham. I've got 3 children and decided that actually I'll go back into practice. And so Alex, me and Alex had a chat, and I've come back and joined Theataccounts, which is fantastic. Alex, a little bit there about him, and he started his accountancy career back in 1997. And he sort of, I suppose, seen a gap in the market for an accountant that's set up specifically for the entertainment industry, and hence Theataccounts was created, and it's just grown from strength to strength. So that's a little bit about me, who I am, and my position here within Theataccounts. I deliver these tax talks as well, and Alex, who's our owner here at Theataccounts as well, a little bit background information about him. So as it says, Alex is Theataccounts is run by Alex, and our ethos has always been that we just try and make tax as simple as possible. We pride ourselves on being friendly and approachable, and we specialise in and have a broad knowledge of the entertainment industry. And as you've probably seen from all the other tax talks that I've done now, we do cover a huge array of services that we offer to our clients. So not only tax return preparation, we deal with the actual registration if you wanted us to, if you're just starting your self-employed journeys and you're not yet registered with HMRC, we offer that service. If you've been self-employed for some time and you're thinking about potentially in the future becoming a limited company, or you are already set up as a limited company, whether that's a limited company by shares or guarantee, we can help with all of that. We also have a VAT department here that deal with any VAT returns if you are a VAT registered individual, again, or company. We have a bookkeeping service, so if you did want any help or advice, as we've mentioned, we've got our spreadsheet that we offer out to clients, but we also can support people for bookkeeping as well, along with payroll. So we offer payroll to individuals, whether that's for limited companies and it's director-only payroll, or whether they do employ other individuals within their businesses. We can support people with that too. And we talked about CJRS tax returns as well. We can deal with that when it's something more specialised in terms of any potential tax relief that you might be able to have. So it just states there that we aren't just once a year accountants. We have a huge array of services that we can offer to our clients, and we just try and make things as simple as possible for your point of view. So if you aren't a client of ours and you potentially would like to get more information about becoming a client of ours, my email and Alex's email address will be available at the end of this tax talk today. Please do email either of us, and we can give you just a little bit more information about our costs and the services that we provide in a bit more detail, specialised, specific for you. And it might not cost as much as you potentially think. So do get in touch. I'm happy just to have a chat with you at any point. So there's just a small disclaimer here. It's just obviously saying that the information that we provide in these tax talks is appropriate to now, but things are changing all of the time. So if you'd like anything more personalised and tailored information, it's really important that you get in touch with an accountant who'll be able to offer you some further guidance and support. So let's have a look then what the COVID support was available at the very beginning. What were we offered when all of this sort of started? So straight away, we had the job retention scheme. So that was given to employers to be able to support them and their employees. we saw the introduction of grants. So if you had business premises and you've been forced to close, they would offer these grants to you based on your rateable value of those premises. So the higher the rateable value, those grants were either, I think it was like £10,000, or if your rateable value was higher than a certain amount, you get up to £25,000. And if you had multiple properties or multiple premises, should I say, then you would be entitled to more than one grant. So there was the grants there to support businesses. There was universal credits was rejigged, if you like, to offer a bit more support for individuals as well. We had lots of people feedback from that there was a sort of influx of people trying to get that support at the very beginning. But I think it's been quite positive. We'd seen a change to mortgage holidays and renters' rights, which was quite important to support those people who were struggling, who potentially had lost their jobs. Like you guys, it was like turning a tap off, wasn't it? So income just suddenly stopped. So there was that help for people that you could approach your mortgage lenders, which is still the case, and that's been extended. You can approach a mortgage lender at the moment and ask for a mortgage holiday. It's obviously different depending on who your mortgage is with, so we'd recommend getting in touch with them directly. But there's also been that improvement to renters' rights as well, to give them more support, and that's actually been increased too, to support people over the winter months. We've seen the introduction of a bounce back loan, which initially was a different loan, and then it then got replaced then with this bounce back loan, which was much easier for business to obtain money, funding, cash flow quickly, and people did need it quickly. Businesses did. So you could borrow up to £50,000, which is still the case, and that's actually been extended now. And it's based on up to 25% of your turnover. There's the opportunity, which I'll talk about in a bit more detail shortly, to be able to up that if you didn't claim the maximum. There was the VAT deferral, which is still the case and which has been extended further now, which we'll talk about. There was the July payment on account. So those people who needed to make a July payment on account in July 2020, that was automatically deferred until January. But that has actually now can be incorporated within the new time to pay arrangement. Again, I'll talk about that shortly. And then obviously there's the SEISS scheme, self-employed income support scheme, which is available for you guys, and I'll talk about that shortly in more detail, but probably the most relevant one. So that's what was there at the beginning, and all of those things have been changed, and we'll talk about how sort of the job retention scheme was going to close, but now it's not, it's been extended, and we'll go into those in a bit more detail as we go through. So that was, as I say, a flowchart that we created initially in April, and we updated it in September. So it's changed again since then. But that just shows you, quite nice to follow if you are a business, what path you can potentially take on there. So you can, does that work? Yeah. You can they've been given longer now to pay back those bounce back loans. So initially it was over 6 years, I think you can extend it over to 10 years now, which has really helped businesses going forward. So there's been that extension there. And there is the option, I think, as well, of payment holidays and interest-only repayment periods are also available for businesses once they do start, hopefully, to get things back up and running again. VAT is the same as it is here, really. So we've seen any VAT payments that they've been deferred for that period of time. You can ask now again for those to be extended here. And we've seen that temporary VAT reduction for the hospitality and tourism sectors. That's been extended. So that current lower rate of 5% for that industry has been extended now until the 31st of March, which might be relevant to some of you. So we talk the employed. I'm just going to go on to my slides because I think it has changed since this point as well. There's been so many changes. And again, we've seen the introduction now of further grants. Let's talk about those in a little bit more detail. So the self-employed income support scheme. The self-employed income support scheme is made up of 4 taxable government grants for self-employed individuals and those that are members of a partnership, for those whose work has been affected by COVID. Okay, so we started off, there was a delay, wasn't there, with the support available for self-employed individuals. So we'd seen the introduction of the furlough scheme to help people within working within a business, but it was a bit of a delay to get this help and support for self-employed individuals. But eventually we'd seen the introduction of this grant. So the first grant, which applications are now closed, it covered those first months, March, April and May, where you would receive 80% of your taxable profits, okay? And that was based on your criteria, on the qualifying criteria, which we'll talk about on the next slide, which still remains the same at the moment. So as long as you did qualify from that eligibility, you'd submitted that 18-19 tax return, they would work out, going back up to 3 years if the information was there, and they would work out an average of your 3 months, 80% of those taxable profits, and you would get paid that up to a maximum of £2,500 per month. So that was the first grant, now closed. The second grant, exactly the same criteria, but then had seen the introduction of the 70% of taxable profits up to 2,190. So hopefully some of you may have benefited from that. Some of you didn't, because if you had only become self-employed in 2019 and hadn't submitted that 18-19 tax return, it meant you wasn't eligible. So there is quite a few people that fell, unfortunately, just through the cracks. So the second grant now is closed. That closed on the 19th of October. I did mention, I think, in the last tax talk, so if you hadn't, hopefully you'd claimed at that point. So as I say, that was up to 70% of those taxable profits. So what's most relevant now is that third grant that we've got. So this has been updated. I think initially we'd heard that it was going to be 20%. That got scrapped, and we'd seen it increase to 40%. What do we see now? Well, then that has been now extended, increased to 80% for the month of November, because we're now in a national lockdown. So that averages out for the November, December and January, with the November at the 80% and the other 2 months at 40%, it averaged now at 55%. So you can get up to 5160 as a further grant. Really important now, if you have been in receipt of those other 2 grants and you feel that you do need to apply for that third grant, you still feel that you are eligible and you do apply for that, remember that all the grants form part of taxable income. We have dealt with some clients when it comes to reducing potentially those new payments on account. You just need to be wary now. There's another amount that needs to be included within that potentially we didn't realise that individuals might get. So just be wary of any changes to future payments, any reductions in payments on account. I'll talk about that shortly anyway. So we've seen this new grant then, the third grant, come in, fantastic, supporting self-employed individuals and people who are part of the partnership again. The applications, we believe, are going to open on the 30th of November. So exactly the same as before, you can apply to be able to get that third grant. There will be a fourth grant, which covers February, March and April. More details is going to be announced about that, so later on. So you'll notice that there is 2 months that aren't actually covered. So you've got like June, July, August, and where's September, where's October? You know, for people who, like us, completely in your industry, who have been affected for those months. This third grant's covering November, December and January. I think that, you know, they've come back and said it's not actually bound to months, but it's just grants that you will be given. that's the sort of guidance that we've been told here. But anyway, that's the third grant, and the fourth grant that we'll cover February, March and April. We don't know any more details about that yet. As soon as we do, we will put it on our Twitter, we will put it on our website. Keep an eye on that if you need any more information. So just to point out again, remember, if you have received any of these grants, then they will need to be declared on your tax return for obviously 2021. So just be wary of those payments on account if you've made any alterations to those. These need to be included. Okay, so let's look at the eligibility criteria when it comes to the SEISS. So what's new? So if you have had the 2 previous grants, you potentially might be looking at applying for this third grant. What's the eligibility? So it's still exactly the same in the fact that you must have filed a tax return for 18-19 by the 23rd of November. Remember, they had given individuals that extension date. 50% of your total income from self-employment. So on your tax return, if you have multiple sources of income coming into that tax return, if you're employed, you have dividends, 50% of that total income must come from self-employment to qualify. Your average trading profits must be less than £50,000. So based on those 3 years, if you have submitted 3 years, going back, it must average out at less than £50,000. If it doesn't, you're not eligible. You must plan to continue trading. That's really important. So they've said all along that you must carry on expecting to carry on to do what you do for the foreseeable. And you must be affected by COVID. Okay. What's new then? What have they changed? They've added that you do not have to have claimed the previous grants to now be eligible for grants 3 and 4. So even if you, you've got to, the eligibility, the criteria is the same. However, if at that point you didn't feel your income was affected and you didn't apply for that grant, but things have changed, you now still can. So you don't need to have claimed the first 2 grants. You can still apply for the third grant regardless. And you must declare that your business has been impacted by reduced demand due to COVID in the qualifying period. What's the qualifying period? Well, that's from the date, the 1st of November, because that's what we're covering first when this third grant kicks in, up to the point you make the claim. Well, it's not opening until the 30th of November. So most of us are in lockdown now. Most of us are probably going to be affected. But that's what it means by the qualifying period, from the 1st of November, from the point to the point that you're going to make that claim. Have you been impacted by reduced demand? And that's the difficult part. Can you say, because other people, lots of clients are picking up other work. They might well be working in a supermarket or in a cafe and do POE work. They might have adapted things slightly and do things on Zoom and on the internet now instead. So how can you say that you've been affected? And lots of clients sort of ring us and ask us to, I suppose, give them the answer to that. And we can't give you the answer to that. Only you know that, really. Nobody knows your business better than you do. You should be aware of everything, and you will know whether you could put your hand on your heart and whether you can definitely say, yes, I've been affected here by COVID. Are you in a worse position? I'm just reading this. Worse position than you would have been if it hadn't happened? That's something to ask yourself. The answer is that yes, and then you should feel comfortable being able to sign that declaration and get that grant if you're eligible. So it's back to you, really. You need to make that choice and say, have I been affected enough to be able to claim this? HMRC is not looking to catch people out. They just want people to make honest declarations. So that's the sort of understanding of it. I spoke to a client only yesterday. who said, I did receive grants 1 and 2, and I've got work lined up. She's one of the lucky ones. Things have really picked back up. I don't think I should be applying for that 3rd grant. And I said, that's your decision to make. That's totally up to you. And if you feel that's correct, then fine. But again, the emphasis is on you individually to make that decision. Really, have you been affected? Have you been negatively affected by coronavirus? And it must be the case for most of you, because in our industry, theatres have closed. Work has, in our industry, really stopped, hasn't it? Totally. So hopefully that helps you just understand the eligibility for that 3rd grant, that essentially it's the same as it's always been, just with those 2 little extra bits there. And you don't need to have claimed the previous grants to be eligible to be able to claim the 3rd. It's just still back to the criteria. Okay, so how to apply then? So if you haven't ever applied for these before and you want to know how to do that, you need to apply via the official gov.uk website. Applications, we believe, will open on the 30th of November. So to be able to apply and to check, you need the following information. You need your UTR, your unique tax reference number that's been given to you at the very start of your self-employed journeys from HMRC, your national insurance number you're going to need, and your government gateway user ID and password. So if you do not have a user ID, you can create one when you make your claim, and you obviously need a UK bank details, UK bank account, and the details of that bank account. You must make the claim yourself. You can't get an accountant or tax advisor, financial advisor to do it for you. You must do it yourself. The emphasis, as I say, is with you. So that's the information. If any of you need me to email that over to you, please do request later. As I say, our email addresses will be available at the end of the slides. So common questions that we get then. So can I claim the grant if I currently have other income? Really common question. Yes, you can currently receive other income such as PAYE and still be eligible for the grant. So even if you've picked up work elsewhere, if your self-employed income has reduced because of COVID and you meet that criteria, you can still claim. Can I carry on working and still claim the grant? Yes, although you will need to declare your business has been impacted for the period you're claiming for. And it does say that HMRC will check for fraudulent claims. So again, it's going back to that qualifying period that we believe, from reading all the text that's given, all the information, that qualifying period is from the 1st of November up until that point where you would make your claim and going forward into December and January. I didn't claim the other grants. Can I still claim? Yes, as long as you meet the eligibility criteria, it is possible to apply for grants 3 and 4, even if you did not claim grants 1 or 2. So I think they've always been quite open with that you can sort of have a mixture of all 4. If you needed to, you can have all 4 if you qualify, or you might just want 1 and 3, or at what point you feel it's necessary to make that claim. Can I apply for grants and claim universal credit? So at the beginning, there was a lot of clients that relied on universal credits as a top-up to their income. So we've just put there, however, once you start receiving self-employed income support too, then this will be classed as income. So this means the amount of universal credits that you're going to get will reduce. However, you will not have to pay back previous months of universal credits because of your payment or grant that you might receive. So it is part of income. You would need to let universal credits know of that, and they would adapt your payment, your claim, in accordance with the amount that you've received. What if I received a grant but I think the amount is incorrect? So another question that we get asked quite a lot, really. there is now an official review process, which is available once you are able to log in and you are able to make the claim, and the information is provided there, the amount that you will get. I believe on there that you are, it just say if you're not happy or you don't feel that amount is correct, either maybe too much or too little, that you can then log in to make a claim against the amount and question it basically. So they do advise that those calculations should be double checked first. So if you do have an accountant and you know that amount, it's always worth giving your accountant a call and double checking it with us. We would quite happily do that with you. And if you still think it's incorrect, then obviously you can ask for a review of your claim then going forward by logging in, as I say, to your government gateway account. Will HMRC consider using my tax return for 2020? As I said, it's still the criteria is the same, and it's still going back to that 18-19 tax return. At the moment, we do not believe that they're going to look at any 19-20s when it comes to working out the amount for these grants. And as it says there, just due to the increased risk of fraudulent claims. Okay, so hopefully that's some of the questions that we get asked a lot. Some of them have been emailed in, others are just from what we get from our own clients. Hopefully those have been useful, really, the ones that we would say. Let's talk about then additional support that's available now. What's changed? So we've seen the introduction of the more time to pay or enhanced time to pay system, which is a repayment plan that's allowing individuals to spread across their tax bill. So earlier in the year, we'd seen the option for individuals that are struggling to pay their 31st of July 2020 payment on account. Those were automatically deferred until the 31st of January 2021. So that was automatic. It was done for everybody. You could defer that payment until the 31st of Jan. This has been extended further now. So those who have tax to pay in January, so you've got that deferred payment on account, haven't you? You've also got your potentially any balancing payment that you need to pay in January. You might even have your next payment on account in there. So there could be sort of that making made up of three amounts. So as long as that's less than £30,000, but more than 32, you will be able to use or access HMRC's enhanced time to pay system. This will allow you to agree a repayment plan, spreading the tax bill and repaying it by direct debit over a period of up to 12 months. So a January 2021 tax liability, as I've mentioned, may cover that July 2020 payment on account that was automatically deferred. Your January 2021 balancing payment, if applicable. If you had more tax to pay, that's going to be included. If the payments on account was set high enough and there's potentially that balancing payment, you've got that. And then you've also got potentially a payment on account for your first payment on account for your 2021. I just put a tip there. So your 2021 payment on account can be reduced accordingly. So remember, we're talking about your income now for that 2021 year, the year that we're currently in. Where are we? Lots of people have been affected now. We're sort of, more than halfway through that new year. There is that option to be able to reduce that. However, do remember that those grants need to be included, and potentially if you've had all three or will be having all three in this tax year, those need to be included with any other income. So just bear those in mind if we do look at reducing those. But again, this is when you're better off getting an accountant involved to be able to support you and guide you with that to make sure that you're not reducing them too much. So anyway, it could be made up of potentially three amounts, and those three amounts can be added together and agree a payment plan with HMRC, a direct debit to be spread over 12 months. So it's given people that flexibility to pay over a longer period of time. HMRC have confirmed that you need to have no outstanding tax returns, other tax debts or other payment plans set up. You will pay interest of 2.6% a year on the time to pay plan from the 1st of February 2021. And to set the payment plan up, you must submit your tax return to HMRC for the 19-20 financial year, because they need to know the figures. If you don't submit that, we don't know what those figures is of potentially, do you still owe that deferred payment on account? Do you have any amount outstanding, a balancing payment that's due in January? So it's really important that those 19 tax return is submitted so the up-to-date figures are there. Although the deadline is until the 31st of January to submit that tax return, if you do want to benefit from this enhanced time to pay, then we'd recommend getting your 19-20 tax return done now. That's giving you enough time to get it done, work out what your tax liability is, and then apply to HMRC to be able to set the plan up. And then it's done. It's off your mind, it's sorted, rather than leaving it. We're in lockdown now. It's a really good opportunity. If that's you're at home more than you're probably planning to be, use this time to get that information sorted. Send it over to your accountants. We will take on new clients at the moment. If you want us to prepare that 19-20 tax return for you, send it all over. We'll be able to complete that, tell you what potentially tax you need to pay then in January, which will then give you the information to be able to pay that over, to pay over and spread that cost with HMRC if you needed to. So just at the bottom there, you can set up the time to pay arrangement online through your tax account once that 19-20 tax return has been submitted, or you can call HMRC, and we've provided you the number there if you want to jot that down to be able to give them a call. So as I said, it's there to help people. It's there if you need it, take advantage of it. Speak to HMRC to be able to set that up. And if you have not yet done your 19-20 tax return, do it as soon as possible so that all that information is there, submitted to HMRC, so we know the amount that needs to be spread or included within that repayment plan. Okay, so other support then. So these are, as I said, at the very first slide that we talked, one of the very first slides where we talked about the support that was available for businesses and individuals at the very beginning. Some of those are still in place now, but have just been updated. So that's what we're going to talk about now. So universal credit was increased at the very beginning. There's a little bit more information there. If you have no work and you're due to illness or low income, if you're over at 18 or over, they do take into consideration any savings then that you might have. So that needs to be told. You need to declare that to universal credit when making any potential claim. You need to be under the state pension age, and you need to live in the UK. So there's a few of the criteria there to be able to receive universal credits. It all depends, it's individual to you, and it will be based on the household income of your savings. So we've got that there. We've got the bounce back loan that was offered, which was much easier for businesses to be able to obtain quick funding, quick cash flow for their businesses. It's backed by the government. The government guarantees 100% of that loan. So it was it's available for small and medium-sized businesses to borrow between £2,000 to £50,000 up to £50,000 up to 25% of their turnover. So as I mentioned, the government will guarantee 100% of that loan, and there will not be any fees or interest to pay in the first 12 months. And then after that, you've got a very small amount when it comes to a loan of 2.5% interest a year. It's now, I think it was only open until the end of November, if you hadn't yet claimed bounce back loan. It's now being extended, I believe, until the 31st of January. So you've got a bit more time to be able to apply for a bounce back loan if you feel that you need that additional funding to get you through now. There's also the option, which is new, to top up that bounce back loan. So it's available to those businesses who have not already borrowed the maximum amount permitted under the scheme, so your 25% of total turnover. So potentially, if you applied for this back in May time, and you thought, well, I could get £50,000, that is within my 25% of my turnover. However, I probably don't need all of that. I'm just going to apply for 25, and that's what you receive. But now we're in the later half of the year. We are nearly at the end of the year. This has gone on much longer than we all anticipated or wanted. And now you are at a point where you could do with actually the additional amount, further 25,000. You are able now to apply for that top up if you need it. So bear that in mind. If you have already got a bounce back loan, but you didn't go up to the maximum of £50,000, you have the option to be able to top that up. They've extended it as well, that you can pay over, initially it was 6 years, it's gone to 10 years now, which is nearly half the payment, I think slightly more than half, but it's made a big impact for those businesses. And as I mentioned, you've got the ability to be able to pause payments if you need to, or just pay the interest on it if you're going through in the next year or two. More, you need that further support, it's potentially there. So do have a look at that. It's available for businesses across. We've got mortgage holidays. So lots of people at the time took advantage of a potential mortgage holiday. So those were introduced again very early on, and those have been, I think, they can go up to 6 months if you need it. This is obviously going to be more specific to you and your mortgage. So if it's something that you feel you might need, get in touch with your mortgage advisor, ask them for support, ask them what's available for you to be able to take advantage of if you need that time. I think the sort of advice is, if you need it, take it, but do make sure you understand sort of anything that sort of impact on those payments. If you take those payment holidays, do get in touch with your individual mortgage lenders who will be able to provide you more information, but it should be there for you if you should need it. We'd seen, as I say, the introduction of grants at the very beginning if you had a business premises. So those were paid in chunks based on your rateable value of your premises, 10,000 up to 25,000, again, depending. Now we've got the new grants. So grants worth up to £3,000 per month. They're available to businesses in England that are forced to shut due to the national lockdown. And the grants are available from the 1st of November. So if you have a small business with a rateable value of or below 15,000, you can claim then your £1,300 per month. Medium, so if your rateable value is between 50 and 15,000 and 51, you can claim 2,000. And then if your rateable value is over that £51,000, you can claim £3,000 per month. If you're not sure what your rateable value is, get in touch with your local council, your valuation office, and they'll be able to provide you with that information. VAT deferral. So there was the option to defer those 3 months, wasn't there? So March to June 2020, if you submitted a tax return or if you a VAT return in that period, you were able to defer that one VAT payment. You now have the option to spread that. So initially it was due, I think, in March, but then they've been able to now spread that payment over the 2021 financial year if you need it. You will need to opt into that scheme, is how we understand it. It's not going to be automatic. You will need to opt in. And the government have said that they will have this up and running in early 21 to be able to do that. So if it's something that you feel you will want to make use of and do, then keep an eye on that and have a look earlier next year when it becomes available, how you opt in to be able to take advantage of that potential payment spread. Renters' rights then. So again, in line with supporting individuals with their mortgages, you've got the renters' rights. If you rent your premises and rent your home and you are struggling at the moment, there's been some changes to the law to increase notice periods to 6 months, I believe. So that will just mean that renters now are given more opportunity to be able to potentially find alternative support or accommodation, so that they know that through the winter that they can stay in their home, really. Again, we can have a look on Gov website if you need any more advice on those things. Okay, so there's lots of other support there, isn't there? And there's been some changes, and it's consistent, the amount that this changes all the time. I've got a feeling there might be more changes on the way as well, going to be released in the next few days. So it's difficult for us as accountants to keep on top of all of these changes, but we do. We work tirelessly to make sure that we are on top of it all. So do keep an eye on our Twitter, our blogs, our website, and we will update you as soon as we know any more as well. The next thing that I'm going to talk about is the job retention scheme. So this, as I say, was introduced at the very beginning for businesses affected by COVID, so that they could furlough employees and apply for this grant every month to cover the majority of their wages. So we'd seen that introduced at the very beginning, hadn't we? It was due to close, and there was various other replacements that were due to come in that have been adapted again since. So again, really hard to keep on top of all of these changes. But what's happened now? What's relevant now? So the furlough scheme has been extended again until the 2nd of December. Okay. And then it's currently set to end. Will it? Will there be extension? Will we be locked down further, more than a month? Potentially. So there potentially will be further furlough, but who knows? We'll see. But at the moment, it's been extended until the 2nd of December. What will you get now? Because a lot of, obviously we're in lockdown, we're forced to close, employees on furlough will continue to get 80% of their salary, up to the maximum cap again of £2,500 per month. So this is 80% will be paid by the government for the month, like for the month of November, which mirrors the contribution that we'd seen in August, where the employers only cover the pension and the national insurance contributions. So the government will pay that 80% of your employees' wages. Employers can still, if they wanted to, top that up if they wanted to. But the government will provide 80%, and that's the minimum that the employee will need. It matches what we'd seen of this furlough scheme in August, where the employers will need to cover still the pensions and the national insurance contributions. The scheme is open to small or large employers, and those are charitable or not-for-profit. And crucially, your employer does not previously need to have used the furlough scheme before. So you don't need to have done it before to be eligible. So you do, as it says there, what you do need, or your employer does need to have done, is submitted a payroll on the 30th of October to be eligible. So your employer must have made a real-time information payroll submission on your behalf on or before the 30th of October to qualify for this month, for your November, the furlough for that month. You will be able to work part-time while on furlough, so your employer can either put you on furlough full-time, or you'll be able to work part-time and be furloughed for those remaining hours. So very similar as it is the same as it was before. You can do a mixture of the both if need be, but if you close, the business are closed, they're going to make use of that full-time and being able to claim that 80% for people. So that's the introduction of that, because we are now in another national lockdown. After that, then we see the introduction at the moment, again, things just change so quickly, of the job support scheme. So this was initially introduced to replace furlough, for businesses to continue to support them going forward through this. So the idea, I suppose, is that things are starting to pick up. Businesses are slowly going to need to start to recover, and this was there to sort of support them for that. It was broken into JSS Open and JSS Closed. So the job support scheme will run for 6 months. At the moment, it's due to replace the furlough scheme that's scheduled to end on the 2nd of December. And as I mentioned, it's made up of JSS Open and JSS Closed. So at the moment, this is the plan. Once the furlough finishes on the 2nd of December, this will then kick in if businesses need to have still that support. So JSS Open is aimed at businesses that are operating but facing reduced demand due to coronavirus. So there's, as I say, there's going to be that recovery. There's going to be businesses that continue to see effects of this for a long time. So it is now that you must work at least a fifth, 20% of your normal hours. When they first introduced this, there was talk of that you needed to work a third, but now it's 20%. And so they're consistently changing things. But at the moment, it's a fifth. So you need to be at least working a fifth to be eligible, and you need to work this amount as a minimum, and then you'll be paid in full for those hours that you work by your employer, which makes sense. You work 20%, you get paid for that 20%. So let's talk about the hours that you're not working. What happens then? So of that proportion of your time, so if you like, the rest, the 80%, what happens? So the employer will now need to cover a fifth. And what before was employers were expected to cover a third of that, which is quite a lot of money for businesses that were suffering. So that's been reduced now to a 5%, of the wage of the bit that you're not working. And then the government will pay 62% of the hours of you not working, capped at 1542, and then the employee will lose the rest, okay, which works out about a third of those hours not working. So that's how the structure works at the moment. So most individuals on the scheme will earn at least 73% of their usual pay. So it's slightly less than obviously before when they were getting 80. But it's better than the initial one that they had introduced. Employers can top up their contributions if they need to. And I'm just seeing a question come through. Can you pay back within the first year? I'll have to come back to you. Mr. JD Hunt, what that's about. Sorry. So employers do have the option if they wanted to top up. So an employer can pay more than the 5% minimum contribution to the employee's unworked hours, although this is optional. So potentially the employer can do that if they need to. So that's if at the moment, providing things don't change. If furlough ends on the 2nd of December and then we come out of lockdown and businesses are set to be open but will still be recovering, still see that reduced demand because of coronavirus, they could take advantage of this, which will support their employees throughout the next few months. And this will run for 6 months at the moment. So that's the JSS Open. Let's have a look at the JSS Closed. So this, I think, is in mind if there is more local lockdowns. So JSS Closed is aimed to help businesses that are legally required to shut down or partially shut down during the autumn or winter under the local measures. Okay, so this scheme, says the government, cover the 2/3, so 60% of an employee's wage when a business is forced to close for at least 7 days. If a business chooses to close, it won't be able to put employees on this scheme. So it is back to that more forced local, I would imagine, lockdowns. This is the idea of this, that then businesses that are having to close are able to then benefit by this. So the government will pay your employers 67% of their salary, up to a maximum of £2,083 per month. This applies for any time you are unable to work because your workplace has been forced to close. Your employer will not have to contribute towards your wage, though you can top up the wage if they so wish. Okay, so there's further support here. It's more of a bigger package that the government will provide if you are forced to close, and again, employers can top up if they need to. To be eligible, an employee must have been working for their employer on the 23rd of September. At the moment, that's the cut-off date. Those on 0 hours or temporary contracts will also be eligible. The government has not given a deadline for employers to apply or how much notice employees must be given. And we're expecting more guidance to be published in due course. So that's sort of its basic. You can just see the difference between the two, that the package that you will be given if you are forced to close under a more local lockdown is going to be better than obviously if you can stay open but have reduced demands. So if you're an employee, hopefully that will give you some reassurance that your employer might be able to benefit by these for you and be able to still keep your sort of minimum amount that you're going to receive, really. So going on then, just to sort of summarise what we've talked about, or I've gone on about for an hour. I'll just talk about the contact details. One question's come up about the bounce back loan. Can you pay it back within the first year? If you want to pay it back, you can. Yes, but I think most people are going to carry on using that you know, utilise that cash flow, keep that cash flow there for your own business. So contact details here, we've got Alex's email address if you want to email him, my email address, our website, please do check that out, and Twitter, we're on Twitter and Instagram actually now. Go on to either one of those you know, show some love, I suppose, support us, and we will keep it updated as much as we possibly can. Going on then, I did in the last tax talk offer our free simple bookkeeping spreadsheet. You can request that by emailing tax@theataccounts.co.uk. So if you didn't tune in and you haven't requested it, you still can. It's a spreadsheet we've created here at Theatre Accounts, which is really useful if you're just starting off your self-employed journeys, or perhaps you've been self-employed for a while and you just want that further help and guidance really on how to potentially make bookkeeping a bit easier. So please do email us and we'll happily send that to you. As I did mention at the very beginning, we offered a small competition, or we ran a small competition on the last tax talk, and we said that anybody that requested it would also be put into a prize draw to be able to win a free tax return prepared by us here at Theatre Accounts. So we've done that, and we have a winner. So that person's on our next slide, and the winner is Samantha Fowler. So if you're not watching Samantha Fowler, I will email you anyway and let you know. So we will complete for you your free 1920 tax return. So hopefully she'll be really pleased that she's won our competition. So we often do run competitions on our Twitter and on social media platforms. So it's always worth tuning in for those as well. But well done to Samantha. So I think that's it then, really. In terms of questions, we've answered those. Thank you very much for tuning in again to my tax talk here again at CCI. It's been great. We've done lots of them now. Hopefully you found them useful. It's quite difficult to talk for a whole hour to a laptop and not have much interaction. So thank you for bearing with me. And they've got a bit easier. The more that I've done, the easier they've got, really. But it is difficult just to sit in a room on your own and chat to a laptop. Hopefully, as I say, you found them useful. Some of them are still available to re-watch on YouTube, so have a look. We are thinking about, in the next couple of months or so, running sort of, or uploading on social media some sort of quick videos. So I will do a quick 5-minute video with just kind of the bullet points of what you really need to know, because I appreciate an hour to sit and listen to me is a long time. So I can just do quick ones. So keep an eye on those, because some people do prefer rather than having to read it all, just to be told quick here, this is what's going to affect us in our industry. And as I've said, anybody who is looking for an accountant or would just like some further advice, you know, as I say, it might not cost as much as you potentially think. Please do email Alex or myself, and we'd happily have a chat with you going forward. Hi, Liam.
Hi, thank you so much for that. Thank you. Yeah, it was really lovely to have that on the stream and kind of listen to the joys of tax that a lot of performers, I think, are scared of.
Yeah, I'm sorry, Liam, I can't hear you very well. You're breaking up, so apologies. I didn't catch what you said.
It's all right. Well, I will let you go, and we will see you again soon on the platform. Thank you so much.
Thank you, Liam. Bye. Bye, everyone.
Thank you so much for tuning in, guys, this morning. And what a great chat that was with Natalie Corrigan from Theataccounts. And we will be back puppeteering for TV with Julia Frost at 12 o'clock. And that was a fabulous workshop last time. I definitely was watching backstage. So please, please, please tune in for that one at 12 o'clock. You've got 1 hour to grab yourself a coffee, make yourself some breakfast, and come back on to do a little workshop, which is quite fun. I'm on here all day and all day tomorrow. If you do have any questions, please visit the CCI Twitter and subscribe to the YouTube channel. But I will see you all very shortly.